Hey guys, welcome back. This is Jason Stapleton with the Forex Market Preview brought to you by TradeEmpowered.com. And of course, if you want more great training like this, head on over to TradeEmpowered.com and check out all of the free resources. We got more stuff for free over there and better stuff for free than anywhere else you'll find anywhere on the internets. But normally you've got kind of a heads-up cam where I'm talking to you. I don't have that set up today just simply because I want to kind of cut right to the chase and show you guys something that we've been talking about in the Syndicate. The Syndicate is a private group that I run each and every morning. Actually, it runs all week, but I do War Room every morning where I kind of show those guys everything that I'm trading, where I'm getting in, where I'm getting out, and kind of talk through the why behind the trade. And one of the things that we have been discussing is this idea of a Fibonacci inversion trade. Now, you all are very familiar with the 2618 trade, or at least you should be if you've downloaded the training, which is, one of the things that all of you, if you're at all interested in what we do here, you should watch that free training. And market comes down, we get a little rally, market puts in a double bottom, followed by a rally up, we get a break of structure, then the market pulls back into a 618 Fibonacci retracement, right? Just like that, right down into that 618. And the idea behind the 2618 trade is we're going to buy at the 618. We're going to put our stops below the double bottom, and we're going to look for a move back up into previous structure at around, in this case, 73, 77, with some potential follow-on targets as well. That's kind of the basis of the 2618 trade. However, there are some other things that we can do. Number one is, what about selling as the market comes into this high point? Is there a way that we can kind of identify that? Is there a way that we can kind of use this level here as a potential level to look to short after the market breaks out? And so I talked briefly with these guys this last week about the Fibonacci inversion trade. And the Fibonacci inversion trade is nothing more than just saying, watching the bottom here, taking this back up, looking for a move up into a 1618 extension. Now, any of you who have watched one of the most popular videos that I have done is called "The Craziest Trading I've Ever Seen," is the kind of the title of it. I know it's catchy, but almost 1 million people have seen the video. And in that video, this is the method that I was using. It's a Fibonacci inversion strategy. I was using it on a range bar or on a range chart. It works just as well on hourly charts. And one of the things that I constantly get questions on is hey, would you teach this to us? And it's really quite simple. What you're looking for is you're looking for a market that's in a downward move, and then you're looking for a break of structure. So in this case, market broke structure. We got a pullback. Now we're looking at a potential rally, and what I'm looking for is to short, down in here, rally up. I'm looking to short the 1618. in hopes that the market will move back down into previous structure and I can take off some profits. And we've got some targets that I talked through as well. You can see another example of it going the other way here on the dollar yen. Market rallies up. We get this nice little move. Boom. We break structure. Market comes down. We rally up. Now what are we waiting for? We're waiting for the drop down into the 1618 extension, looking for a rally. The idea here is not unlike Elliott Wave. A lot of what you will see kind of as a foundation of what I teach is based around this idea of Elliott Wave and the 5-wave principle. If you guys don't know what that is, kind of 1, 2, 3, 4, 5, A, B, and C. And I'm going to, I'll elaborate on this later, but this is essentially the way the Elliott Wave is designed. You've got the 1 leg, the 2 retracement, the 3 leg, which is typically the longest leg, the 4 leg, which is a retracement, and then the 5 leg, which is the termination of a move. And then you get an A, B, C, D correction. Well, what the Fibonacci extension or the Fibonacci inversion trade is designed to do is it's designed to identify this ABCD move. Now, the reason that a lot of you guys say, well, Jason, why don't you teach Elliott Wave? Why don't you do a class on that? Well, the reason I do teach Elliott Wave. You learn it in the courses and the training that we teach, whether you know it or not. because everything we do based on structure, based on breaks of structure, are all designed around the market moving in waves, in momentums. And but I don't teach it the way traditional Elliott wave guys will look at the market, for one simple reason. I've talked to many Elliott wave guys. Some of them are phenomenally good traders. So I don't mean to say that the science is not effective or profitable, but this is what I will say about it. If I put 5 Elliott wave guys in a room and I show them all the same chart, all of them will disagree on what wave we're on. Or there will always be dissension among the ranks on what wave we're on. Now, one of the standards that I hold myself to and that I hold everybody at Trade Empowered to is that anything we teach has to be testable, verifiable, and repeatable. All right, so you have to have rules that are non-subjective. That's the only way you can make something testable, verifiable, and repeatable, is that you have to have non-subjective rules that everyone can understand. And if they understand how you're making the judgment, they should be able to go out and use the same standard to do their own analysis. Elliott wave doesn't work like that. There's too much left to be subjective about. And so what we did was, and what I did was, I clarified the rules for the structure that we trade. And although there is a strong foundation in Elliott wave principle, we don't teach Elliott wave, but we do it for that reason. But that's what we're really trying to do here when we look at this move. So in this case, we just had a ABCD move up, but now we've got a little correction. If the market will correct into this 1618, could be a really nice area. Aussie dollar, you can see, has been moving down quite significantly since we hit the highs at around 72, 73s. Now trading around 70.20. So if we rally up into 70.82s, this could potentially be an ABCD relief rally before the market returns into its bearish trend. Now, in the event that we have a 2618 trade, like we did right here, you can do the same thing. You can take that low, wait for the rally up into the 1618, short the 1618, and look for the pullback down into the 618 for a potential buy. And what I'm going to be doing here over the next week or so is putting together a training on this for those of you who are in the syndicate. So if you are a syndicate member, you're going to be able to access this training absolutely free. And if you're not a member of the syndicate, you can become a member for a month, for a full 30 days, and all you got to do is pay $1. It's $1 to try it out for 30 days. And I'll leave the link underneath that so that you guys can go check it out. And before your $1 membership is complete, I will put this training out to you guys. So then you'll have 2 different strategies designed around structure that you can use absolutely free. One of them being the 2618 trade, which all of you should already be familiar with. And then this one, the Fibonacci inversion trade, and the 1618 extension, which I will be putting together later on next week. So with that said, guys, I hope this has been valuable for you. Please head on over to Trade Empowered. Check out all the other free training that we have, and I will be back next week. And we are going to be starting, guys, our mind map series. So this is the mind map that I put together for all of you who are, or anybody who comes through our course. This is the process of everything that a trader needs from start to finish to be effective as a trader. And we lay out this mind map so that guys can see how it works, first and foremost. And secondly, so anybody inside of our organization knows exactly what goes into becoming a successful trader. Now, a lot of this stuff you end up doing instinctively, and you don't have to run through the mind map. It's not like every time you place a trade, you've got to be worried about entry stops and targets and what type of limits orders you're going to use and what type of target orders you're going to use. That stuff is all pre-built into your trading plan. But hey, if you don't have the trading plan up here, then you really are screwed. So what I want to do is start walking you through some of this stuff and talking about it. It will have to be generally, because we can't get too specific with anything, because with all the new people who come through here. But I can spend some time here on the week talking about trade plans in general, talking about money management in general, talking about pre-desk routine and pre-market analysis and some of those types of things that every professional trader does, and talk about some of the things that you can start doing that'll help improve your trading right now. But we'll be starting that series soon, so make sure that you're subscribed on the YouTube page so that you don't miss a lick of that. Until next week, guys, good luck, good trading. I'll talk to you then.